Welcome to Retirement Straight Talk with Paul and William, featuring award-winning financial advisor and former host of the Sunday Money Show, News Talk 1010, Paul Baraka, and his associate advisor, William Baraka. Creating and keeping wealth does not need to be complicated. Paul and William will cut through confusing and contradictory financial advice to give you the real facts to help you invest better and enjoy a worry-free retirement. The views and opinions expressed in this video may not necessarily reflect those of IPC Securities Corporation. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.
Okay, hello everyone, and welcome back to episode 25 of Retirement Straight Talk with Paul and William. I'm Paul, and that's William in the other camera there. And today we're going to talk about everyone's favorite subject, and that's why I should pay or why shouldn't I pay for life insurance. Everyone likes talking about insurance. But before I mention that, well, you had some dental work yesterday. You had a couple of molars removed. How you doing?
I'm okay. Sorry if I sound a little funny, everyone, but that's why. I'm okay. The worst part is I'm living on a diet of applesauce right now, and Paul, you know me, I like to eat, so that's the most painful part.
What about ice cream? You get ice cream too, right?
That's right. I got some ice cream, so
awesome.
That's okay.
Okay. Well, why don't we dive right in? By the way, thanks everyone for listening, whether you're listening or whether you're watching through our YouTube channel or listening through one of the streaming services. Again, thanks for joining us. Do you need to pay for life insurance? Well, you know what? I've been doing this for 32 years, and you know what? There's many things we don't want to pay for. I'm guessing not too many people want to pay for car insurance. We do it. I wouldn't feel comfortable driving out, especially on the highway today, without car insurance, even though we're required to pay it. I wouldn't feel comfortable without insuring my house. By the way, did you get some statistic, Will, about what's the chance you can have a fire in your home these days? What is that?
In Canada, it's a 1 in 500 chance.
You can have a fire in your house. Most of us wouldn't feel comfortable without health insurance, without mortgage insurance. But for some reason, I found life insurance is different. And I don't know, I think there's maybe two reasons. One, people don't understand insurance. That's one. They really don't understand why and what it does and the purpose of it. And the other reason is some people just don't like paying money to insurance companies. I don't know why, if they're providing a good value, but those are, to me, the two main reasons why people often don't want.
I'd add too, Paul, that there's a sense of invincibility with some people. People always say, oh, this will never happen to me. And it's also a bit of an uncomfortable topic, life insurance. No one likes to talk about what would happen if they or their spouse passed away. It's uncomfortable. So that's probably another reason why, or a couple of reasons.
It's interesting. About 5 years ago, I had a high school reunion, and these are people I haven't seen in 40 years. And I was around 60 years old, and we talked about the people that weren't around. And there was about 100 of us in all the classes, and 6 had died. And that blew me away. And then I looked at the mortality tables, and that's bang right on. Actually, by the time you're about 60, there's about a 6% chance you're not going to be around. That's a much bigger number than I thought, much bigger number. And, you know, here's the type of things that we often hear in our business, William, when we talk about insurance. We hear things like, my partner will be fine. They'll downsize the house. They use their RSP. They'll get help from their parents. I like that one. As if the parents have worked their whole life, all of a sudden want to spend half of their money on the surviving spouse. But those are the types of things we hear. But, you know, I think you want to.
Or another one, Paul, is they say, oh, I'm self-insuring myself.
Yes.
Which.
What does that mean?
Well, I hate to break it to you, but there's no such thing as self-insurance, because a core tenet of insurance is you're sharing the risk with all the other people who buy insurance.
Yes.
So if you're by self-insurance, you're really saying I'm just taking on all of the risk by myself.
Yeah. And I think a lot of people think that way. They're thinking more theoretically. They're looking at numbers, but you know, we're human. We're not We don't run our lives by spreadsheets. And to me, here's the reality. That ignores being human. It ignores, if someone dies, the incredible emotional devastation from their surviving partner, spouse, the children. And the last thing you want to worry about is money in that situation. The absolute last thing. Your kids, the kids don't know what's going on if you have younger or even teenage kids. The last thing you want to worry about is money. So why don't we talk a little about there's really two reasons to buy insurance, right? There's what we're going to talk about today, which is really family protection, whether we're going to protect your family or your business. And we're kind of going to talk about business protection in another episode because that requires a little bit more time. So protecting your family. And the second reason you buy insurance is as a tax efficient estate planning tool. That's why wealthy people buy huge insurance policies because you know what they say, I'd rather leave the money to my children than the government.
So that's a whole other topic. Let's stick.
Whole other topic.
We could do a whole episode on that. Let's stick today with family protection.
Family protection. So really, Will, there's the way I see it. There's three main reasons why you want family protection. If someone passes away, you want to pay off the debts. Generally, people want to leave their family in the same world that they were in before. Could you imagine your kids? Oh, you can't go to this school anymore because we can't afford it. We're going to rip them away from their friends that they've known for years and put them in some strange place, or take you out of your community where your friends and family, and you got to go somewhere else because you can't afford where you're in now. So a couple main things you want to look at. There's paying off debts, which is usually mostly the mortgage. There's normally people want to make sure there's money for the kids' education, right?
Fund the RESPs.
RESPs, whatever. You want to make sure there's enough money. And these are all done. You calculate these numbers. Your advisor should do these calculations for you. And the other one
it's what's called a needs analysis. So essentially, you put in all these variables. You take in the percentage of income of the partner that you want to replace if something happens to them. The debts, like you said, the mortgage, any other debts, funeral expenses can also play into it. And making sure you're able to fund the RESP and also your own retirement savings.
Yeah, retirement. And again, maintain the income for the surviving spouse. Most people want to leave their family in the same world they're in now. And that's a calculation to determine all that. And that'll tell you how much insurance you'll need as a lump sum. So again, maybe you want to go into the two types of insurance because I find people really don't understand this at all. There's what we call term insurance, which is temporary insurance, and permanent insurance. Now, the permanent insurance is really designed for the estate planning part. For just protecting your family, usually term insurance is more than adequate to do what you want. And it can be extremely cheap. And by the way,
the great majority of people will only need term insurance.
Yes, agree. And by the way, here's what I hear a lot. We recommend insurance and we hear, I can't afford it right now. I don't want to spend the money right now. Really? And I'd like to ask every single person watching us or listening is, if your income dropped 1 or 2%, would you notice it? And I can't imagine anyone would say yes. 1 or 2%, that's coffee money almost.
Well, to give people an idea, Paul, like I ran a quote for this episode just to give people an idea of what it costs. And for a term 10 policy for a 50-year-old male, for $1 million coverage, the premium is $113.94 per month. So to get to your point, most people would not realize that. They wouldn't notice it at all. And then it gives you that family security. And maybe
that's it
we should have done more of a primer too, Paul, for the people listening on the types of how term insurance works. So you can buy like a term 10 policy or a term 20 policy. So you look at how long you need this insurance for. Again, your advisor can help you with that. And then there's different terms. So if you buy a term 10 policy, the the premium you're paying, it's guaranteed for those 10 years, even if you have any health changes. Like premium you're paying, it's guaranteed, and the coverage lasts you 10 years. And then you can buy term 20.
Well, no, the cover, you can renew it after 10 years, but the cost goes up significantly. So it's not just for 10 years.
Yes, that's right.
So and then there's 20 years, right? And it's just, there's different, there used to be 5 years, although that's not around too much anymore. So you tailor it to how long you think you'll need the protection. By the way, you can buy 2 plans. You might say, well, maybe I need more protection in the next 10 years. So you buy a 10-year plan for the next 10 years. Then you buy a 20-year plan with a lower amount for 20 years. I mean, everyone's situation is unique, different, but there's a lot of flexibility in how you can buy the insurance. And again, usually you're not even going to notice this coverage. Think of it, for money you're not going to notice. You're going to protect against the devastation of your family. Not to buy this coverage, to me, is almost immoral. Maybe I shouldn't say, but it's silly not to buy. Maybe that's just a better way of putting it. And if people say, oh, I'm self-insuring, you mentioned that before, the real cost of insurance is if you don't buy it and something happens. That's the real cost of insurance.
Yeah. I think that's a good place to wrap it up today, Paul.
I think it is too. So again, I want to remind everyone, hey, subscribe to us if you're not already. And if you subscribe, you're going to get a notice, right, William, saying that every new episode that comes up, you're going to get a notice in your inbox, I believe. Or rate us, please. And only rate us if you're going to say something nice. We don't want any bad ratings. And pass it on. You know what? I challenge everyone. William and I try to talk about things that are get away from the media frenzy and the media hyperbole, and say things that are really important. So I challenge everyone to pass this on to just one other person. Now, the next episode, I think we're going to have a lot of fun with. Are you paying too much for advisory fees with too little return? So that's going to be a fun one. We're going to talk about that one next week. And mention also, if there's a topic you would like us to discuss, hey, just send us an email at info@westendwealth.com, info@westendwealth.com. And if you'd like to have a chat with us, you'd like to talk to us about something you heard on the show today or past, hey, just send us a note to info@westendwealth.com. Again, thanks for listening, everyone, and we'll look forward to seeing you next time.
Thanks, everyone.
Thanks.
This podcast was brought to you by West End Wealth Planning, an award-winning wealth planning practice catering to small and medium-sized business owners and to those looking to create a worry-free retirement for themselves and their families. To learn more, go to westendwealth.com. Don't forget to rate this podcast and subscribe to Retirement Straight Talk with Paul and William by going to Apple Podcasts, Spotify, or wherever you find your podcasts.